Hello everyone and welcome back to my channel. I'm so glad you're here. Last time, in part 1 of this series, I talked in detail about the comprehensive basic strategy of my super trend system. I also mentioned that besides simply following the overall market trend when trading, we should also really know how to sell when everyone is at their most FOMO stage, or conversely, how to buy when everyone else is feeling most fearful about the market. So how exactly can we go about avoiding letting our deep-seated fears control us, and instead use mathematically calculated methods to identify where the maximum panic is and act accordingly? Just as Warren Buffett famously once remarked, when the crowd is most fearful, that's when we should be the most greedy. So how can we keep our mindset calm and objectively observe the situation so that we can invest at precisely the most opportune moment? Generally speaking, there are a lot of different financial influencers out there today have their own unique perspectives. For example, some people look at commitments of traders' reports or track how many tweets are talking about shorting the market and being extremely bearish. When that happens, it might indicate that everyone is at their most fearful, which usually marks the bottom. But I prefer to be more objective. So what can we look at instead? One of the most straightforward approach we can take is to look at something like CNN's Fear and Greed Index. It serves as a reflection of the overall market momentum and the sentiment between various asset classes. Secondly, you can look at the AAII's Investor Sentiment Survey to better understand and evaluate the psychological state of different group of investors. Usually, this is considered a contrarian approach, but aside from looking at these two publicly available indices, I have actually done some research myself. Today, I want to introduce to everyone two indicators that I personally developed. One is called the ALO Sentiment and RSI. The other one is the ALO by the dip backtest. All right, let me first introduce what ALO Sentiment and RSI actually are. As the name suggests, RSI stands for the Relative Strength Index. But what about my specific version of the Relative Strength Index? Besides being a standard RSI, I've also incorporated some very different mathematical calculations behind it. To put it simply, you'll notice that there are some quite unique and interesting features here. So what are these small signal flags? I call them the greedy flag. When these flags appear, it means I can be extremely aggressive and greedy. Why is that? First, it means the market has already entered a state of being severely oversold. However, just because it's severely oversold doesn't mean you can immediately jump in and buy right away. Remember, low could go lower. After severe overselling, I actually have a mathematical program running in the background to do the calculations on the rate of change of the option volatility. The subtle changes in options volatility behind the scenes allow me to make these strategic hedges. This is actually when it first appears in the market. So for example, if you look specifically at SPY back in March and April of this year, when geopolitical tensions and war talk peaked, this indicator triggered twice, matching the exact market bottoms. This also happened last year during the initial phase of tariff announcements, and the first bottom appeared. So if you're swing trading, actually this indicator is incredibly useful for timing your entries at the dip. Over that 2-week period, actually the first wave had already happened, but after that, Trump made some more statements, like imposing extremely heavy tariffs and so on, so the market then entered a state of extreme panic, reaching a point of madness, with single-day swings of up to 10%. But my indicator triggered on the exact day the drop peaked. It is calculated strictly using mathematical formulas, keeping all emotion out of the equation. Looking back, even in 2023, these indicators also appeared, and the win rate was very high and precise. That covers our first main point. Now, let's move on and discuss some other tickers in more detail. For example, QQQ. So on April 1st or March 30th and April 1st, if you had already made this trade, even if you didn't make the trade on that exact day, but did it a week later, as of today, QQQ alone has already gone up by 33.12%. Even if I don't do speculative trades and just go with general market like RSP, it's the same. You can still make trades at these levels. All right, you might say, no, I want to do some high beta stock like Tesla. Back in February or March last year, Tesla was at $227. If you managed to buy it, you would not even need to wait for it to reach the peak. Just going back to last year's median line would already be $400, $440, or $460. Microsoft? Google. This indicator gives me great confidence, letting me know exactly when I can be more aggressive in making a move. As for the mathematical calculations behind this system, aside from the RSI, there are two tools that interested viewers can click to check out. One is called the volatility heat map. What is this? It automatically calculates the implied options volatility entirely behind the scenes. The red zones mean that at that exact moment, options are extremely expensive because market participants are panicking. The green zones mean everyone is completely calm, meaning the options are relatively cheap. You can also view their specific implied volatility trend as well. That is the line of implied volatility that you see here. The maximum goes up to 100, and you can see that during certain periods, it actually constantly sitting at 100 when the ticker is pricing in a huge move ahead. So that means the market is experiencing a lot of volatility, but this is just an auxiliary tool. What I mainly look at myself is the RSI, and when I see the appearance of this greedy flag, I can go in more aggressively. So that is the first point. The second indicator is, well, after I have these greedy flags, much like with my previous super trend indicator, I also want to run a backtest to see whether my assumptions about using this greedy flag are actually correct. So what about this by the dip? Actually, I've set two criteria for it. The first one is, after a stock shows a greedy flag and you buy in, at what point should you take profit? You can assume when RSI reaches 65, or for some stronger stocks, those that are in a continuous long uptrend. You can set the RSI a bit higher, say 75, or for some friends who aren't comfortable, like if I lose 3%, I feel hurt, or if I lose 5%, I have to get out, then you can set it like that. But for leader stocks, I usually allow them to run a bit longer, so I'll set the RSI a bit higher. And usually this RSI, as I've told everyone, is a key indicator used on Wall Street. When a stock is strong enough and reaches a certain level, that's usually when the public starts to get greedy, but I have involved already. So when everyone else gets greedy, that's exactly when I start taking my profits off the table. For example, in this case with Google, over these past 2 years, every single time you see that greedy flat appear, or let's put it this way, since Google first went public back in 2004, whenever that gray flat appears. What does 94 mean? It means that if you invest $1, your return is $94. Let's look at different tickers. You don't need high beta ones. Goldman Sachs, 12, and it also appears precisely at those few deep points. In this case, if I set the RSI to 75 to take profit, it actually successfully captures the whole wave. Goldman Sachs went up to 57%, so taking profit here isn't a bad idea because it was consolidating sideways for a while. From June last year to September, it was consolidating for 3 whole months. Now things are looking good, and as for this current stretch, if I had managed to buy in on March 13th when the greedy flag appeared, by today I'd already be up 35%. Even some really boring stocks. I was able to do it with Costco too. I did it for a while recently. Did it for a shorter period, bought a core position from 960 up to $1,050 based on my super trend indicator. After that, it even shot up to $100. But as you can see, even with a really boring stock like that, the signal still appeared at the right spot. The logic behind the crowd's panic and the option volatility calculation is actually the same. Sometimes with boring stocks, your return might even be better because for boring stocks, the price of their options is much lower. For example, Tesla, when this greedy flag appears, I can do it here at $220. I follow the script, and when the RSI starts to reach overbought level till here, I sold it at around $430. By then, you've already made over 100%. For example, if I look at the main indexes, you can see it even more clearly. Basically, of course, I don't have to capture the entire 100% move from the bottom to the top, but usually when it reaches these levels, profit taking will start to happen. So you take your profit from this wave, and then you just wait again. Even if I've already taken profit, for example, last year on September 19th, I had already taken profit. In fact, until this past April, which means for a full 7 months, the indexes actually remained stagnant. So you could focus on other stocks with your capital. We could also apply this indicator in trading with the futures market. The frequency at which it appears is also very, let me describe it as accurate. So this gives me strong confidence to make the trade. Now, when it comes to the futures market, since the trading hours are even longer, I can just shorten the time frame. And for example, looking at the 4-hour chart reveals that the underlying mathematical mechanism remains exactly the same, but the returns are often even better. For diligent traders or friends who want to capture continuous setups, this short-term approach is definitely useful. So for me, to be honest, this is actually my absolute killer indicator. Every single time I use it, it allows me to have confidence that perfectly buy the dip, and the various settings inside are also highly suitable for many different types of traders. You can easily adjust it according to your own personal risk appetite. You can change different settings to fit your style, and you can even set the specific stop loss percentage exit as well. So, for those who are more aggressive, they can set a significantly shorter time frame to operate and study. For those who are more conservative, they can wait until this signal appears and then carefully and slowly consider whether to take action. I've even tried applying this indicator to some commodities like silver, and actually this signal does not appear very frequently at all. But when it does appear, it's usually a really good buying opportunity if at that time you're able to buy at a low point. And if you just happen to catch a massive wave at that exact time, the potential returns can be incredibly lucrative and very attractive. This important indicator also gives me a lot of extra confidence, helping me not to let my own feelings influence my trading decisions because the math will always tell you exactly when you need to stay calm. So today, I hope to share these two indicators and some of the core logic behind them with everyone here. If you are interested in learning more, you can subscribe using the link in my profile, and you can also check out some of my comments over on TradingView. I will try to update more often alongside with my trading philosophy. In my next video, I'll be talking about some different option management strategies. I've developed a specialized system myself to manage my own options and worth to share with all of you. All right, I will see you all next time. Bye bye.